Hello, and welcome to the Accounting for Your Success QuickBooks Desktop Edition training video series about QuickBooks company files. This training is brought to you by Accounting for Your Success, which is located in DeKalb, Illinois. The screen you see in front of you right now is the home page for QuickBooks 2011 Accountants Edition for a sample company provided by QuickBooks as part of the basic software. It is a product-based sample company, which means they sell on account and their customers pay with terms afterwards. What you see in your QuickBooks company might be different depending on which year and edition you use, and also the nature of the company that you are doing the accounting for. Right now we're going to briefly illustrate some of the differences between cash basis and accrual basis reporting. To do that, we are going to go up to the top of the screen, click on Reports, go to Company and Financial, and click on Profit and Loss Year-to-Date Comparison. I'm going to collapse the sub-accounts in order to make the report a little bit shorter. And on an accrual basis, which is what everything defaults to, you will see that the year-to-date revenue in the sample year is $449,000, and the net income is $113,000. To see what those numbers would be on a cash basis, you go up to here to Modify Report. Under the Display tab, you see the report basis is set to accrual. Change that to cash, click OK, wait for the computer system to catch up to you. You now see that the revenue on a cash basis for this year is $381,000. The year-to-date net income is $61,000. What's different is that, as I mentioned before, this sample company invoices customers on open credit terms, and the customers pay within terms, or however it works. And so there's a delay between invoicing the customer and making the cash receipt. As a result, if you've billed more, especially in the first year, if you've billed more than you've received, you will see that the revenue is higher on the accrual basis, which usually means that the bottom line, the net income, is also going to be higher. We're going to minimize this, go up to Reports, go back to Company and Financial, and look at Balance Sheet Standard. And again, collapse everything down so we can see things a little faster. You'll notice, for example, here on the accrual basis balance sheet that accounts receivable is $93,000. That is the total amount of money that Rock Castle Construction has billed customers that the customers have not paid yet. You'll see that accounts payable is $26,000, which is based on the invoices that Rock Castle Construction has entered as payable to vendors. And you'll see that the retained earnings, which is the life-to-date prior to the current year, profit or loss for the organization, is $61,000. The net income is $113,000. Go to modify this report to the cash basis. We do the same thing. Go up to Modify Report, look at the Display tab. It's set to accrual right now. Change it to cash. Click OK, and the numbers change. You'll see now that accounts receivable is $5,500 compared to the $93,000 we saw on the accrual basis. You'll see that accounts payable is now $13,000 compared to the $26,000 we saw on the accrual basis. Retained earnings is now $40,000 compared to the $61,000 from the accrual basis. And the current year income, net income for this year, is $61,000 compared to the $113,000 we saw on the accrual basis. Now, there's a lot more involved in cash basis versus accrual basis accounting, but those are some of the basic illustrations of the differences. And you can go up here to Edit, Preferences, Reports, and Graphs. And under Company Preferences, you see that this company is set up so that all reports will default to the accrual basis. You can change that to cash, click OK, and from now on, when you start a report, it will always start out with the cash basis rather than the accrual basis. This is changing the basis for reporting, which is regulated to some extent by the Internal Revenue Code, so you be careful when you're making any changes to that. Consult your tax accountant or contact the IRS There are some restrictions about changing from a cash basis to accrual basis or vice versa, and there's also some timing differences. This training was brought to you by Accounting for Your Success. We are located in DeKalb, Illinois. If you have other areas of interest to you that you would want more information on in QuickBooks or in bookkeeping or accounting services, contact us at accountingforyoursuccess.com. Thank you for your time.